Now, just for your knowledge purpose, I'll discuss the case of what happened in the ITC yesterday. It was a long awaited news. The market was expecting the demerger of the hotel business has to happen, which was awaited for some time, means demerger of the business. That will become part of a course at some point of a time. Some of the students in the evening batch is doing M&A. For them, it could be very interesting to see because whatever has happened is part of your curriculum. Now, whatever I'll discuss here now would be three parts I'll discuss, so that one, as a general layman, you should understand that this kind of event which happens, how does it impact the company from a layman's perspective, anyone who does not even know any criticality. Briefly, if I tell you whatever I'll be discussing from the various articles. That means if you're already expert of the topic, then you might not require the knowledge, any kind of knowledge. But let's suppose I'm a general layman, I do not know anything. What is a demerger? What has happened? Why the share price fell? Basically, the news should have been good because two businesses are getting separated. The If I'm a holder of a shareholder of ITC, I'll be getting a new share in the new business. Now, what exactly happened that share price fell? Second would be what kind of a valuation the market gives them. When we say a valuation, basically, what is the estimates by the analyst, those who cover this kind of a company, that when they do analysis of any company, what kind of a valuation they are giving to this kind of a company. Third important part, which anyone should know, no matter which background we belong to. Since we are the future chartered accountants, we should be doing it in a very certain way. You should be understanding business. That means, let's suppose I'm getting into, just before I go back to that ITC, let's suppose I'm investing in some business. Some businesses have a heavy capex. Capex is capital expenditure, heavy capital expenditure. Some businesses have a low capital expenditure. Now let's suppose I have a and B two businesses, and some of them are heavy capex business. If it's a heavy capex business, the return expectation would be what? Or leave apart the capex, I'm saying if I invest in some business, I should justify my return on capital or return on equity, whatever funds I raise and invest. Because the two functions what you've done in your junior classes is procurement of funds. That is, you procure the funds and then you do what? Utilization of the funds. Entire financial management could be summarized amongst them different ways we can have. It's a procurement of funds, raising of fund, and then it's a utilization of the funds. I have raised funds, I am utilizing funds. But I have two, three businesses, let's suppose, and one of the businesses is not generating that kind of a return which is required. Do you think you'll keep pumping in money for that business? Or let's suppose I have one business house, a conglomerate in which I have n number of businesses. Let's suppose one business gives me a 10% return, one business gives me a 20, one gives me a 30, one gives me a 40. The business which is giving lower return could be long term, I am seeing perspective, but that requires a heavy amount of a capital expenditure. That means the back to back I have to pump in the money. So how long you can keep in pumping the money? If you are a shareholder, you will certainly ask me a question, sir, that these businesses we have, out of these businesses, what is the justified return on capital we are getting? And if you segregate high earning business from the low earning business, the market should be happy. Because let's suppose I segregated two businesses we have segregated. If we have segregated two businesses, I am original shareholder of the main business. I'll get share of the second business. If I'm interested in this business, I'll stay, else I can sell. For example, when I was one entity, I had to be in that business because I wanted to be shareholder of that company. But I did not like one of the businesses which it holds. Now let's suppose I want to part away with that separate business. After that demerger, can I do that part? Yes, I can stay with the high return business and stay away. Now exactly that happened, but still market was not happy due to certain reason that I'll discuss with you. And what exactly was the flow which happened? Second part is why the share prices fell. A general common sense should be known. We generally call it as when there is a rumor. Rumor was there. For example, the funds will come. For example, demerger will happen. Demerger will happen. Demerger will happen. Now everyone wanted to buy. Once the news comes and you sell it off, they book the profits. That's one part of it. Second part of it, what valuation the business is getting, future valuation what they're getting, how they have done this segregation, and what kind of a bifurcation they have done. So I am showing you the heading itself, look at this. If you read, these are the articles. Why I'm taking the articles is because you are very nascent stage. I'm presuming the those who are listening, they could be very nascent stage. Those who are expert, they anyhow do not require this kind of knowledge, because there are a lot of people who are expert. We are very new. I'm assuming myself to be beginner of this subject, and those who are doing M&A with me, they will understand much better. In fact, this video you can come back and refer after the merger acquisitions chapter. You'll find that whatever you've done would be part of it somewhere here and there. ITC hotels fails to excite investor but makes no big difference to ITC stock outlook. Now that means, if you look at, they have named it first time ITC hotel. That means new business will be ITC hotels. As of now, we have company what? ITC, which has ITC cigarette. What you know by major, it is some part in the FMCG also. You have, some of you would be using that, the products also, and one was the hotel. Now they have segregated this. Now this first part, if you look at, these all name are the top which are given, Prabhudas Leeladhar or the Jeffries. These are the brokerage houses. The analysts cover them. They are giving their targets. What do they expect the price to happen? It will happen or not, no one knows. One thing I told you earlier also, again I'm reiterating, any discussion I'm doing in the class is only for our educational purpose, so that we get educated on the events, and it was one of the very important events related to the subject at least. Now if I read, the ITC ended with 4% down. That means share fell down. Although in the previous few months the share also has increased. So those who are buying in the anticipation, automatically when the event has happened, they'll sell it off. It was common. Now the reason was, the if I speak to you the reason, otherwise it could have been a major jump also same day. The demerger was there because value unlocking is happening. One business holding the value and two businesses separately. For example, previous week we have seen the same case with the Reliance and the Geo financial services, the value unlocking, what we call it as. In this case, you look at the, if I read, the ITC ended session 4% down, with their feet in expressing disappointment over the company's decision not to full split of the company's hotel business. You know what has happened actually? Anyone who would have seen, the decision is ITC decided to hold 40% and balance 60% would be with the shareholders. That means it is not a complete. That means they still kept some part of it. So market was not happy. That was one part of it. This is only one part of it. That means they will distribute 60% to the shareholders. Shareholders were expecting, maybe I'm holding one share of ITC, I might get one share of what? A new business. But ITC in itself has kept some stake, which was not very impressive from the some people who invest in a high yield business. Reason, understand the few points next I'll say. The retaining 40% does not make sense, because look at the second line, which is very important. There is no guarantee that ITC will not deploy any further capital in hotel business. For example, if they have retained, that means going forward they can still do. They will keep investing the capital. Now you can put a question that, sir, if we are investing in capital, return we are getting, it's perfectly fine. But is that capital justifying? Is that investment justifying the return on capital? So I'm leaving somewhere in between, and I'll go directly. Look at this part. One of the important parts is, look at this markets. This paragraph I'm reading here, markets have been gung ho about the demerger because the hotel business has been a drag in the ITC books, since hotels are capital intensive business. Hotel is a capital intensive because it takes some time. You have to spend huge amount on that. It has always delivered significantly lower return on capital than ITC's other business. That means, what was the worry of the shareholders? The worry was that you have some businesses in which you invest the capital. Some businesses give you good return on the capital, some businesses do not give. If you segregate that business, let's suppose I love hotel business also because the way tourism is expanding in India, maybe I love the hotel business, but you do not love the hotel business, let's suppose. So if you have to part away with the hotel business, being part of ITC you could not do, but now you could have done. ITC has still put a dent on it because they have kept some part with them. That means they still have the scope of what further investing. So that was a return. If you look at the return, what they earned last year pre-tax return capital was the lowest, 10%. 10% was the return. Now look at another one of the businesses, one of the major businesses of ITC is what? Tobacco. Let's look at this. ITC's last line I'm reading. ITC cigarette business earns return on capital more than 800%. Now think of a logical sense. I'm not saying cigarette smoking is good. Neither I smoke, neither I know someone who smokes nearby at least. And which is business is a business. I mean, they are doing it. It does not mean that we cannot be the investors. But you understand, business has one rule. When we speak about the finance, when we speak about the general common sense, it means that return should be there. We give the money also, we invest money somewhere, return has to be justified. Now look at the kind of return what one business is getting, look at the return what second business is getting, and look at the capital expenditure. Capex is capital expenditure. In their cigarette business, the capex is only 7%. Return, you can imagine what is there. Although it's a negative list, I not advising you go and buy that, or you do something, invest in ITC today. It's not the advisory at all. Look at the hotel business, what kind of investment they are doing. FMCG, they are doing FMCG, any product you know which comes, Ashirvad for example. So if anything comes, UP noodles also is ITC. I don't know. Maybe when you eat, you should be knowing those kind of things. In FMCG, they're expanding. That's fine. Maybe it's they're expanding in a segment which is consumable regularly. So hotel business is something which requires a heavy capex, but is not returning. That was one reason. If you try to look at, and I would expect, go back home and read this out, please. The exact article will give you this EBIT is earning before interest and tax. What they give, they tell you what is the split. That means what businesses are giving how much amount of the earning to the bottom line, or how much you are getting top line from them. These articles will speak about it. So ITC split is cigarette is giving 76%, then FMCG hotels agree, that means hotel is giving lowest of the return. And hence I'll show you the price target for the hotel business what the analysts have given is very small. Means it was not a major dent on the ITC if I say per se, if I speak, but still keeping something means you are not leaving apart. You should leave something which is not good from the business perspective, which your shareholders are not happy with. Since they kept some part of it, it was not beautifully taken, or not taken in the well mannered by the market, and hence the price went down. So this was one of the case which comes out. Then revenue business, they are showing the growth rate of the revenue business. This kind of article will help you out in knowing that exactly how much will give you a business sense. How much return I get, was it justified, should I have completely segregated, and so on. This was one part of it. Now if I go the the unlocking value, what we call it as. Now this is only for those who want to understand why the selling pressure came with this news. If you look at the first line itself, he has given what exactly happens in the market, and this is not with this can happen with anyone. In the classical example of how the theory of buy the rumor sell the news work. Buy the rumor means, for example, now one of the share which I have been talking to you, again no advice to buy at all please. It's only for educational purpose. For example, fund will come. In one of the shares we keep hearing fund will come, fund will come, we keep hearing idea, nothing is coming. So by chance if it comes, then you know those who would have bought at the lower prices, maybe possibility higher price they'll do what, we do not know. So exactly same thing happened. It was expecting that rumor, demerger happening, and those who bought, they kept on buying, and when news came in, they what, booked a profit. The shares of retail favorite ITC went up in the anticipation of hotel business demerger, and it has rallied. If you look at, rallied 40% in the last 6 months. 40%, and fall is only what, 4%. 40% is a huge return. If you invested money in the FD, you see 40% in how many years you get. But again, that is not a justification to invest in the share market, please. It's only for the educational purpose. So it was 4% down. I am again saying it was only because shareholders were not happy with the kind of a ratio what they had. I think he should be also speaking on the same thing. He should be speaking on the same thing. You can go back home and check, because I want to go into my main part, of which is a valuation, which you will be able to appreciate once you do the M&A chapter. That the how the share price estimates are given. Now look at this. ITC hotel share price estimated to be at 21. That means out of the total, if the ITC price is, let's suppose, 470, 480, out of that hotel business is worth how much only? 21. That means it's not a major part of it. Plus sentimentally it has hurt basically. That I was expecting to be complete segregation. Complete segregation has not happened. If you look at Jeffries is giving EV EBITDA. These terms are enterprise value EBITDA, which you'll be learning in the M&A chapter. It's a very common valuation parameter we have. 18 multiple he has given, and then accordingly they have done some valuation. In that valuation, these are some of the brokers who are giving the target share prices of Hotel prices. That means these prices, these are not ITC prices. The prices with respect to what? ITC Hotel as of now is a listed company, unlisted. ITC Hotels as of now. Is ITC Hotel Nalayak? Is ITC was one, it is part of the ITC. So it's a basically unlisted as of now. For example, Geo Financial Services is what as of now? Unlisted. But the unlisted company will have the valuation. Numbers they have, they can have the valuation. They can have some estimates if they were listed, what kind of a price they could have had. So these are the price targets given by some of them. These are the price target. That means out of the total business of ITC, this business constitutes a very small amount of it. So I expect you should be reading that these part out, that what they have done, what was good part about it, what was bad part about it, and what exactly has led to the decline, or what was the expectation. Today's any kind of a newspaper you pick it up, they'll speak about the analysis of what has happened. Three parts will say from the layman perspective what exactly happened, the share price fell, why it has fallen. Second was what was the expectation of the shareholders and what exactly took place. And third would be what kind of a valuation are being given to the business. This will help you in going forward. The terms like EV, EBITDA, for example, capex, analyst, for everything could be new for you. Analyst coverage, when the analyst covers something, they cover the comparative analysis they do. They would have taken the similar type of analysis of the listed businesses and then done, if these are the listed businesses, this is their parameters, then if we replicate that parameter for this kind of business, what kind of valuation it commands. So the market was certainly not happy because it was not a complete demerger which happened. But if I look at very frankly, it is very small part of the total business of it. And you should also know a business perspective from the commercial mathematics term, that when we speak about the business, the capital employed should justify, or return should justify my capital employed. If it is not justifying, that means we have not justified the uh, utilization of the capital. The higher the return, one thing is for sure, you cannot have keep investing high capex in a business which can give you 100, 200, 300% return, because there has to be some level at which the stop has to be placed, because you need to diversify your portfolio also. You cannot have that I have only one business in which I keep expanding. If some regulation change, then that business can go for a toss. So that's why every businesses, this kind of business ITC have multiple businesses in which they are trying to move forward in different segments. But certainly yes, they, the objective of the demerger is that you demerge in such a way that high return giving businesses and low return giving businesses can be segregated. If investor loves both type of business, remain the shareholder of both type of business. If you love only one type of business, you remain in one type business, you can sell. But if everything is under one banner, I do not have the scope to sell off the business which I do not love. Today's task is go back home, please read out completely, at least spend half an hour. I've just given a gist of it. Again, it was not an advice to buy or sell, it was only to read it out so that you are aware of it. When these kind of things or questions will come back in the chapter, you will feel that yeah, what is happening. The swap ratios and so on, which will come, I think 11th or 14th, 11th August and 14th August. We'll have some more meetings in which more clarity will come. It's just a brief which has come till now. Is that fine? That's fine. Thank you and take care. Bye bye. We'll wind up here. Thank you. Take care. Bye bye.